Good afternoon from Nairobi for our EGM Securities update. I got Lawrence.
So today I want us to talk about divergence trading.
Yes.
So it's a continuation from yesterday we talked about momentum trading. So today and previously we had talked about technical analysis and getting support and resistance and trend. So we're going to bring the two together. So you do that with divergence trading. So like we said previously, is that this is the momentum indicator. It's supposed to have the same direction with the current market price. So as you see here, the market is falling. So too is the momentum indicator. But what happens is that at some point, in special scenarios, the two might diverge together. So you can see the prices are falling, but the momentum indicator is moving up, going against what you're seeing. So that is what is called divergence. So you can see the indicator here is making like a higher high at the bottom here, but the markets are still going lower and lower. So obviously this becomes a point of concern, and you want to know, okay, why are the prices going lower? But the momentum indicator is showing from the previous low, it's higher, you see? So that's the reason. So this is the reason. So if you see this point here is lower, so it's higher than this point, but the momentum indicator at this point here is actually a bit higher. So obviously now this becomes a point of interest. So this was because of anticipation for the news that was supposed to come out.
Yes.
So actually, if we were on yesterday and we are observing the charts, we should have seen this. We should have seen, okay, we entered here, but again the market is consolidating here, and then the momentum indicators is giving us like a sneak peek.
We didn't read the chart signal.
We didn't read the charts yesterday. So we should have gone out maybe here in anticipation for the news that was going to come out. Because at this price also here, we had American trade balance news.
Yes.
And trade news right now is very, very important because of
the tariff war.
The tariff war between NAFTA and also China. So that's that. So this is classic divergence trading. You can also look at obviously divergence again on the Euro USD. You can see from this price here a very huge drop between this part and this part. But for the divergence, as for the momentum indicator, it's almost the same, and then it's confirmed here again. So again, I'm not saying that you're supposed to buy outright. It just becomes a point of concern. Then you go and read on fundamentals. Okay, are there news that we expect are going to move the markets? Are there any huge meetings that maybe between Brexit and Eurozone? Because the investors will consolidate on this price. So yesterday we see the same thing again with the euro here, a consolidation between, you see the markets are going higher, but the momentum is still the same. So the momentum doesn't push upwards. So you want to ask yourself, okay, what is the market anticipating? Is there a meeting happening between the Eurozone and to discuss Brexit? Are there huge news that are going to push the market? So it's not a sign to just go buy. It's a sign to go research more on what is happening in the market. What is the market telling me?
Let's look at that same theory with the dollar rand.
The dollar rand.
Yes.
Let's see if we can catch something there.
Because this has been an extraordinary move. We've already explained to people, emerging market contagion, a proxy for emerging markets, the whole white farmer story, which Trump was feeding into, the recession, that's the fundamental data. Yeah. Now, what is that? If we were doing your analysis, what's it telling us?
So right now I can't see any divergence because obviously it's the momentum from here to this part, it's falling, and the prices are falling, so I can't see anything much. The most I can say is that even with these huge market moves, the momentum didn't change much. But again, remember, it's range, so it can't go any higher than this. So we are not seeing anything in terms of divergence trading. The problem with the rand right now is completely fundamental.
Yes.
So even if you find something,
so the charts can't tell you anything.
They won't tell you much.
Yes.
It's very good. You should apply it mostly on currencies that are equally strong. Maybe the pound, USD, the majors mostly, because if you pair it against maybe the rand. Because the rand is having to deal with the whole emerging markets, risk. So it has to deal with, Turkey. It has to deal with, things like Indonesia and India and Argentina, and it's all coming here. It has to deal with also its own problems of, economic problems, the GDP. The country is almost in recession. You have to deal with also, other news coming out about, land and things like that. So it has to deal with so much from emerging markets and also its own economy. And also remember, these are illiquid markets. Yes. These are markets for emerging. These are emerging markets, so not much liquidity. You get so one huge move will
So this red line is what average? That's
this is a moving average. Maybe
of what number of days?
That's 21, if I'm not wrong. 21. If I just double click on it, 21 moving average.
And this one down here?
That's a 200 moving average.
So there's a lot of room that it can recover, but still stay in a bad trend.
Yeah.
Yeah.
So what you'd look for if you're going to see a recovery is look for policy. So what policy are emerging markets doing to fight off the dollar?
But thank you so much, as ever.
Thank you so much for your time.
Thank you.
Okay.